Yeah, you mentioned the Middle East as being a profitable area, an area that you see a lot of hope in. Why is that? I suppose lack of exposure to the subprime crisis is one of them. But what else sets it apart as a region?
Look, from an investor's perspective, we're very excited about the Middle East, and it's what's regarded in investment terminology as a frontier market, so almost one step before an emerging market. And what we're seeing is some really smart money sort of lining up and going in there. Just as an example, towards the end of last year, the Harvard University Management Corporation tied up with, I believe, with the Rothschilds. Although I stand to be corrected on that. It's certainly Harvard, stepped up, created a fund to invest specifically in the MENA region. Why do we like the region? As you say, no subprime issues there, no sort of burden consumer. Benefiting from high oil prices, significant infrastructure spend, and certainly high growth rates relative to valuation. So we think from an investor's perspective, it's a very exciting region. You know, being based here in Australia, there can be a tendency to focus too much on the domestic story, you know, resources and banks and the ASX. But as I say, Ashton, which has a presence in London as well as in Sydney, we try to focus on the global picture, and on the long and on the short side, we look for what we believe are the best opportunities out there. And the Middle East on the long side is one we're quite excited about right now.
All right, well, just focusing on our backyard, how do you think Asia in general sits in that global market outlook for the future? You've said the Middle East. How does Asia rate?
We're excited about Asia. I guess if one looks to extend the time frame a bit, if the 20th century was America's century, Ashton's view is that the 21st century will be all about Asia. So, notwithstanding the market volatility taking place at the moment, we think that the urbanization and the industrialization taking place in China, people flocking to the cities, the massive construction is real. And of course, Australia stands to benefit from that. I mean, if you look at Fortescue, what a fantastic story. We think that business is very well placed, and in fact, that too has been a significant contributor to Ashton's returns over the past few years. And
Fortescue, you think, will be one of those stocks that keeps generating impressive returns?
I think for Fortescue, they've been setting the dream for a long time, and I think they've done a fantastic job of that. They're now in production phase. I think that there'll be operational challenges along the way. It's easy to talk about what you're going to take out the ground, to talk about what you're going to ship to China, but once you actually start doing it, there are all sorts of operational issues they'll have to face. But I think they're definitely in the right space. I think they're there at the right time, and it's not by accident. They went out there, they raised the capital 3-4 years ago, they stuck to the story. The Aussie institutions, ironically enough, didn't support them at the time. They had to go to the US to find the money, and those that backed them early are those that have done well.
We haven't really talked about Ashton itself. Quickly tell me a little bit more about the products that you offer. So you're a funds-to-funds manager.
So the Ashton business is a global business, offices in London and in Australia. What we do is we scour the world looking for what we believe are the very best fund managers. We differentiate ourselves from our competitors in 3 key ways. We run focused portfolios, we don't gear our products, and we look to invest in the mid-cap space. So if you like, the $200 million to $800 million size manager. We don't like the guys that are too big because we think they're complacent.
Is Fortescue not falling into that category?
Well, we don't actually invest directly in Fortescue. We would invest in a manager that has a large stake in Fortescue. But typically speaking, we like to be with the people that are hungry, that want to earn the return on capital, but equally those that are sort of well out of the startup phase and have established businesses. And as I say, we're absolute return focused. So if markets are going up or markets are going down, the challenge for us and the opportunity for us is to try and identify how best we can earn money.
What about performance? How have you done? I mean, obviously, you've ridden the credit crisis storm pretty well.
Performance has been good. Certainly, it's been very defensive relative to equity markets. We haven't seen the sort of fluctuation in our funds that we've seen in the markets. And really, that is the selling point of the fund-of-fund product. It's not meant to outstrip the equity markets when things are going well, but it's meant to provide a defensive buffer for investors when things are more challenging.
Where to now quickly for global markets? Are we going to see an absolute return to basics, do you think?
I think there are a lot of people out there feeling pretty sore. If you had to ask some of the regional councils in Australia whether they'd step up and buy CDOs again, I think the answer is probably not. So I think there's probably going to be more of a return to basics. I think there'll be more of a connect between the borrower and the lender. with less sort of investment banking play and stripping our fees in the middle. And that's why we're quite bearish on financials. We think that a lot of people have been scarred through this process, a lot of lessons have been learned, and we're probably likely to see a return to a more simple and more straightforward environment.
All right, on that note, we'll leave it there. Nick Raffaele from Ashton Advisors, many thanks for coming in and talking to us today. And that's all we have time for. If you've got any questions for our fund managers or a specific fund you'd like us to feature in the program, please drop us a line, yourmoney@skynews.com.au. I'm Diana Dorothy. Thanks for your company.